Hey, how's it going, everyone? Mark Anderson here, construction worker turned zero GT hedge fund manager. Today, I wanted to go over some Q&A that we've been getting from you guys filling out the Google Forms. So if you have any questions or want me to do this for you specifically, fill out the Google Forms below in the description. Let's go ahead and see one of the questions we got here from Google Forms. I'll read it out to you guys. Hi, I've adapted a number of different strategies from Options Omega, you and others to fit my account. This involves trading the SPY. His account is 34 grand with TradeSteward. I'd much prefer to trade SPX, but it just won't give me the account side. It's taken some time to build up the tolerance for loss. So starting small with SPY with a view of SPX being much larger, I'd love to get. Here's a link to my portfolio. You'll see familiar strategies. Any feedback is appreciated. I'm still testing different stops on TradeSteward, so I'm not 100% confident in the slippage on SPY, but I back tested it and it all seems at a reasonable point. So let's go ahead and look at his portfolio here. So first of all, good that you know your risk tolerance. This is the point thing. Good that you're going slow, and good that you've kind of put these back tests at this point. So with your account size, this 7% drawdown, I think is, more than responsible. You could run this basically in perpetuity. So kind of what I'd say is, like, first off here, I do like this trade. It's pretty good. The SPY may drag a little more on commissions and fees, and I think you could actually get assigned with SPY after hours too, kind of how it works. Also, it's like you usually buy these back at 1 penny, so you can't get assigned basically before the close just randomly when someone does it. So I would really urge you to look at basically running the same strategy, but running it in SPX with maybe only 2 entry times, or, if a one lot in this is very small, because if you're getting $3, it looks like you're selling, $15 a day or something in this, maybe look to just sell one in SPX and then keep on selling these kind of in SPY. But I would really recommend to explore selling a one lot in SPX to kind of just reiterate that a little more. It's like, let's say you're shooting $1 and you use 2x stop loss, like you're only losing $200 a day. If you did lose, if you were only trading one lot, you would be curve fitting a little bit, but it's fine. And then if we think about that, like $200 in terms of your account is like less than 1%. Okay. And the average standard deviation of the SPY is 1% anyways. So I want you to think of risk and a little more relative to other assets that you could hold rather than just that in general. So losing, the same amount of SPY every day for something that's more strategic, I would not say is bad. But yeah, if you can get good slippage data on it, I wouldn't scale this. I'd like to eventually get over to SPX eventually, but keep doing that. This also very good trade. I'll give you way more of the thumbs up on this one because the losses can get quite big on SPX with all in it open. So I would say go with this one on SPX and then keep this one on SPY. I do like that for you. Then this one, this is kind of like a strangle. I think this is pretty good. I'd maybe say, just cut exposure is, let's get rid of this trade since they kind of, hit at the same times, and let's just go with this one as SPX. Calendars, I also really like these on the SPY. I think it's just more responsible to do that on, and you can do them very small. I also like here how you focused on Monday and Friday because those are going to be best days because of the weekend effect. I would honestly advise kind of getting rid of this one, and then maybe retesting these a little bit and seeing how robust it is without exiting on leg delta, because when we get that one inevitable gap, it's going to happen overnight and this mechanic isn't going to work. So I don't think this is an accurate picture of risk, but since you're doing SPY, you could get away with it. So I would say drop that one. And then I would definitely get rid of this leaf. Like, that is a lot of risk for you with what you're doing. I would just say hold like SPY or even a 2x leverage SPY ETF. I did make some recommendations for backtest that I thought could be helpful. So this is like a 10-15 profit take. I thought you could use some diversification in the morning. It hasn't worked super well over the prior year, but you can kind of play around with the loose mechanics of this. Maybe there's something else that you could, find in here that looks good. I know if we kind of get rid of the trailing stop loss here, me and Connor were playing around with this. If you go like a 40% profit take and a 60% percent loss, it actually just does start to look a lot better. So I'll run that for you. And then also, I thought that this to kind of synthetically be long the market would be a good option in lieu of the leap. I've shared this on other ones, but with that leap, you could potentially use a massive amount of money. Like this leap may cost significantly. I don't even know how much leaps cost, but this could be 10 grand or something for a leap like this. I guess 10 delta. So yeah, I don't like this. It's out of the money. It may not hit. Don't touch this with a 10-fold pole. So running something that has decay and is consistent over a long period of time, and you have that max loss of $5,000, which has never occurred. The biggest loss is only about $2,500, and then overlaying kind of this long call with it. So a lot of this cost of the long call and these drawdowns, average loser here is 500. Average winner here is 100. So you can kind of offset some of that cost of this long one. This would be a good one to do on SPY. If you want to go long SPY, or if you can save on fees, you could go long XSP because there's no execution on this. So, if this is a 34 grand account, you're looking at a 6% drawdown with SPX, 10 times the size is 1.6% drawdown in XSP. I think this could be a really good fit for you. And then back to this one. So here it is. It worked in 2024. So this could be a good option for you as well to basically trade around this time. And then I think you had more questions is, what is your primary source of options education? Book, courses, website, people. It's predominantly just doing and trading. I did really like Positional Options Trading by Seclair and Options Pricing and Volatility by Nattenberg that I thought provided a lot of inspiration for trading and just understanding and confidence around options. But just trading at a reasonable size and being honest with yourself. Well, if you want to be a systemic trader using backtesting, I think that's a good way to be. That's how I speak out because I do. But when your only feedback is the red and green of your P&L, it's hard to make money over time. So I'd encourage you to just keep on doing what you're doing, learn from people off the internet and stuff. There's also some good podcasts out there as well that I like. I really like The Derivative. Is a good podcast you could listen to. And then given my portfolio, any suggestion on trade types I should consider? I'm looking for additional double calendars and longer dated long short options. I would chill on the double calendars. You already have two. I think that adding in that 7-day put spread on SPX, doing those end of day puts on SPX, keeping all of it open, and those 2 Monday, Friday calendars is good. And yeah, that should be fine. There's good stuff in the Trade Steward forums. How have you built up your tolerance for losing? Did you start small and grow? I actually did the exact opposite of that. I basically just put all my money into it and got really big really fast. And then I kind of developed my risk tolerance a little later for that. So my advice more on that would be, if you are figuring out where your risk tolerance is, if it's really stressful, you don't want that and you could be over the line of where that is. But if you're taking so little risk that you're not learning about yourself, that's also equally dangerous. So I would say it's like the example I give is like, how do you know how good your morals are if you never even remotely approach what could be a moral gray area? So you need to get to a size or a risk tolerance or be trading to where you feel a little bit of an emotional response, but you're anchoring that to like a risk tolerance. So for example, using 40% of your buying power and selling 1% to 2% of your account premium a day is like more than responsible with stop losses if you have a small account because you're learning how to trade. So if you're there and you're like a nervous wreck and you're freaking out, like you probably just need to work on your mental side a little more, or say, I'm going to take a month off and just focus on trading purely and back testing and not actually deploying the actual stuff. I'm just paper trading. Like that would be responsible. But you really want to have something that's a little pressing at the beginning, and then you'll get used to it and feel comfortable. If you were to start again from scratch, what would you do differently? What advice would you give people starting to trade options today? If I had to start to scrap, it would be like, a lot of this is way too good to be true. And like, when you see opportunity, you need to jump on that opportunity in full force. But you also have to be skeptical of like why these people are transacting in a way, why they're providing this information, why they're charging you for a course, and what they're trying to do. And are they even achieving some type of success that you're trying to go after? So if people are coaches selling to coaches, and you've never like done anything in actual business, like I don't want to be coached by that person. You're a marketer, you're not that. So I would definitely say like trading is the key to getting good at trading. So you need to do that. And then you need to understand how it fits in your life. So if you've got kids and you're busy and you're like Connor, like maybe you do need to own a lot of SPY and bonds and you just have a little bit of a stake in option trading and you do it for fun. And if you're young or you're coming into cash or you're selling a house, or you're going to be retired soon, maybe you do put a lot more work on it. Or if, you're stressed out with trading, maybe you allocate some funds to someone to manage that for you. But the main thing I would say is like, try stuff until something clicks. And then when it gets with your personality or whatever your risk tolerance is, like continue to just hammer that. And the real difference for me came when I started to really question everything else I saw out there. So people would be like, hey, can you, show me this, do that. This looks like the best back test ever. And then I would just run it. And I realized that like they weren't testing correctly. They weren't constantly checking their trades to make sure it matched. And it was too good to be true because they basically manufactured this edge through a back test or whatever that would be. Or they tell me that they are rules based, mechanical or discretionary and back test. And it's like the second you use any discretion, you're like not systematic and back tested because they're at the inverse of other things. So I realized a lot of people are making money by like taking off some days, constantly changing the portfolio. And when I was really like, these people don't know as much as me, like this is what I'm trying to do. Let's advent all of my behavior to doing that. And then just directly messaging people similar to like this. If you think I'm a person that knows a lot or you'd like to hear from me, is like these are valuable assets, and then find that little group of people that you jive with and contribute as much value as you can to them by asking the question. They get back to you, you do more work about this and be like, hey, following up, here's my response and what I learned after looking at your stuff. And that cycle is really kind of what goes. But again, I appreciate everyone for watching this. If you have any particular questions that you'd like me to cover, my video editor will link the Google Forms below, and you can fill those out with portfolios or any other specific questions. I know you guys also drop in the comments. I make note of those too, but this is the most formal way in the future to do that. So I appreciate this for the Q&A. And if you guys have any more comments on how you'd like the channel to improve, the more you guys support this, the more time I can allocate to it. And the more feedback I get from you guys, the better I'm able to produce content for you guys. So thank you guys.